Kitties, get ready to go live. Alrighty, welcome to the Junius Maltby channel. Most boring channel on YouTube. Evening installment discussing the gold price, where it's going, where it's been, where it's headed for sure. And we'll take a look at some discussions regarding the Federal Reserve. So we're going to wait till everyone fills up. Of course, now that YouTube has changed the program, you actually have to wait a little bit before everyone can get into the live, get into the comments. So we'll wait about 5 or so minutes. We'll let the comments get in there. Give me a sound check. Napalm Death. First in. Andrew Montemiglio. That's a nice last name. I like it. Sounds rather Italian. Welcome. Welcome to YouTube. Welcome to the Junius Maltby channel. I have to hydrate, wet the whistle, otherwise I can't talk. So.
Oh, I hate that expression so much.
Wet the whistle. Well, I had
that
to, whatever.
That is a pet peeve expression.
Well, it's a good old classic. There's a lot of good old classic sayings. That's one of them. So gross. You know, some of them are, they're dying out. We got to keep them alive.
No, we don't.
Welcome to the channel, Reckless. Hey. Glad you're here. So we've got good sound. It's loud and clear. I like it. Well, while we're letting the audience fill in, we did have to express some gratitude to a few subscribers out there. A few of you recently were very kind to Mrs. Maltby. It's most appreciated. The donations that, there was a few that came in that were specifically for Mrs. Maltby's medical costs. And we have to say that it was unexpected. It wasn't the reason she made her video the other day and shared some things with you guys. But a few of you had a heart and said, hey, here is something to help out with those upcoming medical costs and the travel and everything that's going to be involved with it. So much appreciated for that assistance and just generosity. It's amazing. So Jeff, you know who you are. Appreciate it. Thank you for helping out, Mrs. Maltby. Very kind of you. So now it looks like you guys are filling in. We'll just get started. This is a live, so if someone misses something, they can always go back if they come in late and catch the content. But because it'll be uploaded semi-permanently onto the YouTube, so you can always go back. And then I don't want to cause the beginning to be too much of a delay. Let's just get right into the stories. Obviously, we're going to look at the gold price today. Took a little dip. We're in the red. Still above 1900, 1914.02 for gold quote. And it is trading in after hours overseas. And, the markets are somewhat always open. Silver, 24.82, holding pretty strong there. It actually didn't retreat like I thought it would in reaction to today. So silver held up pretty well. Overall, the chart for the year, again, looks awesome. Multi-decade chart looks incredible. So we're not worried about where it's going, especially when we look at some of the stories. We're gonna jump in a internet time machine, and we will go back to Market Watch right here. This is from August, so it's not terribly dated. But remember, I reminded you guys during discussions over the last several months how many times these institutions, banks, financial outlets, the prognosticators and soothsayers, they all had to revise their numbers for gold repeatedly. It surprised even us. I mean, hindsight's 2020, obviously. But when you go back to the very beginning of the year and we started looking at what gold was going to do, where gold was going, well, we thought, 16, 1700 range, really bullish, we thought 18 maybe. Soon, those numbers started changing rapidly. Even big banks like Citi, Goldman Sachs, they began to revise what they thought the metal's price would be, gold specifically, going forward. And it seemed like every week articles were coming out and it was changing. The opinion for the metals prices was the futures was changing. We're starting to now see predictions of numbers that you and I were labeled crazy for. a few years ago, if we had made a video, and there were some similar, but if we talked about $4,000 gold, all of those bears out there, you know who they are. They're kind of hiding right now. I haven't seen a gold bear in 6 months. I don't know where they go, but they're like held up.
Hibernating.
Well, they're hibernating, but I don't know where they hibernate because I've even been out. I mean, I hike in the woods sometimes. I go out in the wild and I explore places. And I have not stumbled upon a den or a cave or any place that these denizens of bearish behavior exist. I don't know where gold bears go at times like this because they're just gone. I mean, it's like they were raptured. They're just taken off of the planet. You don't find a lot of people that are very bearish on gold these days. And again, some people would translate that into this as a bubble. I don't know if I have the time to explain to you why gold is not a bubble. A bubble is your neighbor is buying fistfuls of gold. Your Uncle Daryl that you see at the barbecue, who doesn't know anything, is talking about and buying gold. And it's on every channel all the time, and everyone's talking about it like they're talking about Tesla stock. That's a bubble. To this day, nobody you know really is likely buying gold. They don't own any. They don't have any. They have no access to it. They don't know where to get it, what it looks like. They wouldn't know where to begin. So that in itself tells you it's not a bubble. Because again, almost nobody's buying it. Less than 1% of Americans have ever held any gold that's not jewelry. If it's not a ring on their finger or a necklace on their neck, they don't have it. They don't hold it. They don't own it. They don't care. They don't even invest in it in any way. They laugh at it. They scoff at it. They mock it. They make fun of it. Even that idiot that's on the radio. What's that guy's name I always make fun of? Come on now.
On the radio?
Yeah, he's always on the radio. He's got his little show, Money Matters, Money. Dave Ramsey.
Yeah, that guy.
Yeah, he's always slamming gold. You know, he's your typical. He's just your typical, guy that likes to talk to the boomers and sells his books at craft stores. Those guys, they're always going to believe and act a certain way towards gold, and that's fine. You know, let them have it. Let them have their bonds. You know, go for it. Buy your municipal bonds, tough guy. Tell me how those work out for you in 5 years, please. But now we're seeing these price predictions of gold hitting $4,000 an ounce, not being unreasonable. And we're talking, I mean, fund managers, it's all over. We're going to go through a couple articles here on that, and then we'll talk about, we got a lot of stuff pulled up for you. We got the price predictions on gold, very important stuff. Some central bank behavior that I actually think is fishy. I think it's peculiar, especially when you look at the backdrop, the time frame, what's going on in the world. We'll take a look at that. And then, of course, the article from the Wall Street Journal and a commentary on that because I don't pay for the Wall Street Journal, so I can't see their news. They're not going to let me look at it because they value their opinion so much and they don't want to sell their advertising, so I can't go look at their stuff. That's fine. I'm not going to pay the Wall Street. I'm not giving them a plug nickel. I wouldn't go that far. So let's go back. We'll look at this August article. We got a September article, and then we got a new one from Kitco on the same topic. Sorry, the same topic. Before we get into the article, I just want to take one moment of pause to look at these two absolutely beautiful bars, these beautiful poured bars. I've never held or seen anything like that in my life. I don't even know what magical powers pulse through your hands and body and reverberate into the room you're in when you can hold a bar like the one pictured. I can't even imagine what that's like, the weight, the heft, just the wealth in hand. So this article from August, Michael Cugino, another good Dago Wap Guinea name, I like it, of the Permanent Portfolio, makes the case that gold is still relatively cheap, despite its 35% increase this year. And I believe when this article was written, gold might have been a little higher than it is even right now. They're definitely in the range. A worker prepares to weigh a 12.5 kilogram gold ingot at the Urelectrum copper refinery, operated by Ural Mining and Metallurgical Company in Verkhnaya, Pishma, Russia. Of course, it's Russian. Russians, they love their gold. They've got a lot of it. But take a look here. Again, this is the Internet Time Machine. We're reading an article from August, but it's relevant, trust me. Stocks and bonds may be in an asset bubble as record low interest rates and a tremendous increase in the money supply have sent prices soaring this year. Add gold, which has risen 35% to $2,049 an ounce August 5th to the list. Yes, it was $2,049 back then. But Michael Cugino, CEO of the Permanent Portfolio family of funds, says gold can move a lot higher. It would not be an unreasonable move for gold to breach $4,000, he said in an interview. Cugino manages the Permanent Portfolio, a $1.9 billion mutual fund that is conservatively run and rated 4 stars by Morningstar in the fund research firm's U.S. fund allocation, 30 to 50% equity category. A long wait for a big move. First, take a look at this chart showing how monthly prices for an ounce of gold per continuous gold contracts on the New York Mercantile Exchange have moved over the past 30 years. And there you go. That's the 30-year chart. Very strong, very solid. Again, not a bubble because nobody's buying it. If anything, if you zoomed out, this could be considered the incipient stage, the beginnings, the very beginnings of gold movement. I mean, the gold could double from here, bringing it to that $4,000 range. It could triple from here. I don't even think $6,000 gold is out of the question. Not at all. Obviously not in the immediate near term, but again, we're looking at a decade-long worth of investment here and holding out wealth preservation for the future. So there you see gold sitting at back then in August, about 2000. Here we go. He talks about a triple bottom. You can see the triple bottom from the end of 2015 to 2018. That's the triple bottom he's talking about there. But moving on, here we go. Ever since then, it has been a gradual move up, then some down. It moves sometimes in chunks, gives some back, as we've seen recently, sits around, it does nothing, reacts to stimulus, inflation, the value of the dollar and the euro, but it has had an aggressive move this year, Cugino said. Gold may extend gains as money is being pumped into the U.S. economy. And since then, since he wrote this, there's been an additional $1 trillion injected into the economy, added to the debt, etc. The dollar is declining, and investors are fearful that inflation may return. As a matter of fact, they know it's going to return. They accept that it's going to return. The Fed themselves and those in charge preaching modern monetary theory have cooked inflation into the books, and they don't care. They accept it, they've professed it, and they've told us, the people, the peasants, the plebes, the serfs, and the knaves, you and I, to accept it. You have to accept it. Inflation is good. It is good. It is wrong to think otherwise. He warned of sharp pullbacks even during a long-term move up, as did Nigam Arora, who wrote that gold is an appropriate hedge against stocks. It's a hedge against everything, as a matter of fact. Still, gold is a very small market, and it can be easily manipulated by the governments, Arora wrote on MarketWatch. Not only governments. Well, J.P. Morgan, I guess you could consider them part of the government since they bankroll half of the people running for offices. The case for gold being relatively cheap. When looking back at how gold and stock prices have moved over the very long term, Cugino said, gold is still trading at an inexpensive level when compared with stocks. This chart shows monthly prices of gold divided by closing levels for the S&P 500 over the last 30 years. So look here. Again, gold, his chart there, gold is trading at an inexpensive level because if you see this, it's price of gold divided by the closing levels of the S&P. So back in 11, when gold was broke its first records that we looked at, it was way up here about almost 1.7. Down here we're at 0.6 currently. So imagine if gold rebounded incomparable to what we saw back then, and we would look at significantly higher levels. The S&P 500 was up 3% for 2020 through August 5th, but it was also up 49% from its closing low in March 23rd. Despite that action and this year's 35% climb for gold, the metal was trading at 0.6 times the level of the S&P 500. It hasn't been above 0.7 since 2014. And you can see, looking further back, that it was close to 1.7 times the S&P 500 in August of 2011. I think two things. I think the markets are going to retreat eventually once people wake up and realize the party's over and the confetti's done being thrown and the champagne bottles are dry. Once that occurs, we're going to see a very sobering event with the markets. Now, they're going to retreat. Gold's going to continue rising. You're going to see wealth flow into it. But at the same time, we're going to see significant weakness manifest in all the currencies, all the fiat, all the trash paper coupons of the world. You combine those events together, and gold's really going to shine because people are going to run for it as if it's the only life raft left on the Titanic. And it truly is. It's going to be the safety vessel for those that wish to preserve their wealth and not have it sink. Different crisis, different response. Junius said the quick and tremendous reaction to the pandemic by the Fed, the federal government, and the Federal Reserve was completely different from the actions taken during the and after the 2008 crisis. In 2008, fiscal policies didn't matter much for economic gain. GDP didn't grow because of stimuli. Monetary assistance from the Fed basically stayed in the banking system, he said. This is an important point. We've mentioned this before. Big difference between 2008 and now. The money didn't stay in the banking system this time. It's actually percolating and flowing through the economy. It's being pumped into the economy. It's being dropped from helicopters and aeroplanes and mailed to people in the form of checks. And all the people are begging for more stimulus. Wall Street's addicted to the free money, and they react violently as if holding the markets hostage anytime Congress or the president don't do what Wall Street wishes, and that is give them more. Gibbs them free stuff. So everyone wants the Gibbs right now. It's all about Gibbs. Gives me that, gives me this, gives me my stimulus check, please. And of course, everyone's looking to the Orange Man and Crazy Nancy to make that happen. But now, because of programs meant to help small businesses and payments made to individuals, like we just mentioned, stimulus checks, and again, there's more stimulus checks coming. You mark my words, they're going to mail more free money to Americans that they print out of thin air. Now, you got to be an idiot when you get your stimulus check. I'm talking to the Americans in the audience here. If you're in America and you get your free stimulus check, what are you going to do with it? I hope most of you can immediately lock it up in precious metals. I know some of you do a combination of precious metals and crypto. Either way, you're going to want to escape dollars. Don't go buy yourself a new TV or a DVD player or an Xbox or anything stupid. Put this fiat that they're washing into the system into some place that's going to react to that type of move, to that type of stimulus. And that's definitely going to be metals. Metals, and they can be also copper, brass, lead with a little bit of propellant, or an Arkansas kangaroo, an Arkansas rabbit. You have various choices, but you have places you need to put that $1,200 when they send it to you. You have options. So the payments made to individuals and families through the CARES Act and the Loan Payment Deferral Program stimulus is much more targeted to get the money out to consumers. And when you look at how economics works, again, if the money's in the system, it's out there competing for goods and services. The more dollars, the more fiat trash paper out there competing for limited resources and limited amounts of certain goods. Specifically, we're talking about gold here. It's going to drive the price of gold up. Look at the video we just put out yesterday. We just talked about it briefly on the amount of money being printed and sent into the system compared to how much the gold supply is increasing and how much gold is out there, how much gold is being even minted. And so far this year, it's about 4 million fiat dollars per ounce of gold. So just think of that for a moment. That should put some of this into perspective. I mean, if it was $10,000 per ounce of gold, I could somewhat understand that. But again, 4 million fiat dollars per ounce of gold is remarkable. It's insane. This points to a long-term concern and bullish possibilities for gold. Same sentiment held here. I'm sure it's the same sentiment held there in the comments. Like we've said before, multi-decade bull run for gold. Absolutely. Even though we have deflation now, eventually with excess raw materials, In a growing economy, the velocity of all that money can produce inflation risk. We know that's coming. This is the portfolio that he talks about. This is the funds portfolio, their broad asset allocation. This is as of June 30th. Now imagine if you balanced a portfolio similar to this for yourself. You could. I probably wouldn't. But even this big $1.9 billion fund, they put 22.8% of that fund into gold, 6.15% into silver. They hold some Swiss francs, some real estates, and natural resource stocks. I'm assuming when it comes to natural resources, we're talking about possibly some ag stocks or even fertilizer companies, maybe mining, oil, that kind of a thing. Aggressive growth stocks, some small cap stuff likely. And then they hold some dollars. I would make this part of the pie non-existent, honestly. Maybe just a sliver there, like $5 in it, if that was my fund. Other assets, 0.89. But still remarkable, 22.8%. We've already discussed several videos ago, we have pension funds, and I'll mention it again. The Ohio Police and Fire Pension Fund took a remarkable step as far as pension funds go. I've never seen it in the news. I've never read anything like it before. But this year they allocated about 5% into gold for their fund. And it was true physical gold. They took possession of, I believe, ownership. If my math is correct, if I recall the article in the story, now please don't just jump all over it if I mess up here, but I believe if you go back and review that news and that information, they acquired approximately 12.5 tons of gold. There is no way the other pension funds of all the states and all of the different pension funds that exist in the United States out there, if all of them tried to do that, to take a 5% position, heck, if all of them even tried to take a 1% position in precious metals, it would not happen. It could not happen. It would not happen. There's not enough of it, and the price would skyrocket. We'd see immediate price discovery of gold go parabolic. Gold and silver made up more than 27% of the portfolio, and he goes and he breaks it down, what we just discussed there. Again, we're going to move on here in a minute. I just wanted to show you this. This is an old dated article. I'm going to go back up here. This is another dated article. August 10th, gold could surge more than 90%, hit 4,000 if these two factors remain under control. And this is another article, another piece dated from Markets Insider, talking about gold hitting $4,000 per ounce. So I just wanted to use this just to give you some more backdrop on what we're talking about here. Now, where was my other article? Let's try to find it. That's the dollar. Kitco had it up, and I can't find it. I know I've got it somewhere in here. Here it is. Kitco, this is out October 7th, so just a couple of days dated, 2 days or so. Gold price has bottomed. $4,000 target for either Trump or Biden victory, so it doesn't matter who wins. Again, inflation's essentially cooked into the books. The direction of the U.S. dollar, I'll show you a chart on that in just a minute. You guys have seen it before. You know where the dollar's going. I don't need to explain that to you. But essentially here, it's gold's apolitical. It doesn't care. It just looks at the facts. And the market is destroyed. We know that. The dollar, the state of the United States economy with debt, all the liabilities. We've seen the U.S. debt clock. I don't need to bring that up again. We're over $27 trillion now and gaining. We're going to hit $30 trillion in a near couple of weeks, months or so. Gold price bottomed, $4,000 target. Let's get into it here. Gold has traded sideways the last few weeks. The price action is forming a bottom, says Frank Holmes, CEO of U.S. Global Investors. Despite market volatility ahead of the November presidential election, Holmes maintains his $4,000 price target. The bottom that you're seeing in gold is like a perfect Miami Beach bottom. Gold will go up and it will go down. The DNA of volatility you can measure over 20 trading days, 60 trading days, 12 months. It was up when we talked about a time for a correction. In the beginning of August, 3 standard deviations over 20 trading days. It's now down 1 standard deviation. So this guy's really looking at the charts, really taking that into account. Gold has trended down from its August highs and has not broken past above the $2,000 an ounce mid-August. Physical gold demand has historically picked up following the summer. It's love season. It's the seasonality of 2 wedding seasons in India. It's the season of lights in Diwali. Then we have Christmas, and it peaks for the Chinese New Year, he said. It's an auspicious time for the consumption of gold, and it's most highly correlated with GDP per capita growth. Importantly, China and India's GDP per capita has significantly increased over the past few decades, from over 5% of the world's gold to 53%, Holmes noted. The outcome of the presidential election would not move the price of gold either way. Some are betting on blue, some on red. I'm betting on gold. Well, I think Biden he'd kamikaze the economy pretty well, pretty quickly, and really accelerate it, which would be very bullish for gold. Trump, on the other hand, he's already stated he accepts negative interest rates, and he's encouraged the Fed to maintain 0% interest rates and encourage them to go negative. Also bullish for gold. He's also into stimulus, giving free money away to people, also bullish for gold. So either way you cut this, doesn't matter who wins, gold wins. Done. So that's a recent article, that's a recent discussion, and just to remind you, 4K means 4,000. $4,000 gold predictions. We've seen it multiple times now. It's being discussed. Looking back at the U.S. dollar here, steady downward decline. That's a 6-month chart on the U.S. dollar. I don't need to pull out or zoom in or anything. You know where the dollar is going, and that is down. That's the long-term trend. That's where it's headed. These were some gold articles that were pulled up earlier that I was going to look at. Gold price forecast, gold markets. This is just the predictions on the week. Talking about going into this week, so I'm not really interested in what's going on there. I think we have an overall idea. This week, we're seeing volatility already as we saw today. But again, we're looking at big picture, long-term here. Long-term $4,000 gold. Remind me at the end, we'll get to this article on IRA gold. I'm not into it. You know my feelings on if you don't hold it, you don't own it. Now we're going to talk about the central banks. It's part of the title here, and I wanted to share with you guys this because I think it's bizarre. Some of the central banks we're seeing for the first time in about 18 years took a move to take advantage of these all-time high gold prices recently and sold a little bit. Don't worry, they'll be back. They sell out at the front door, they buy it in the back door. Think of it as like spoofing, kind of like JP Morgan. If anything, they're trying to crash the price to make fiat currencies look stronger than they actually are, and then they'll just swoop in with freshly printed money after they crash the gold price and just buy more of it. The only thing is, they tend to make the rules, and so nobody can really put them in prison or accuse them of manipulation or anything like that. It really is likely manipulation. I think central banks do, in fact, manipulate the price of gold, as we saw in 1999 with Browns down. That was somewhat of a conspiracy between the United States and the Bank of England to crash the gold price, make the dollar look stronger, and, they pulled it off. But the gold ended up somewhere. Somebody bought it when England sold all of their gold. So it's not like they threw it into the ocean or anything. The fact is, these banks sell gold, drop the price, and then buy it with freshly printed, unbacked fiat trash coupons. I don't know how that works, but it works. Somebody gets it done, and they do. Uzbekistan, I don't know really what kind of influence they hold on the global economic stage, but they offloaded some of their gold, the most to help patch its pandemic-hit economy. So they're hurting. And just like major funds, what happens when economies are hurting, especially when you look at Wall Street, we've talked about this time and time again. You see significant market crashes from panic, the bird people, the cokeheads of Wall Street. They lose it. You see the markets bleed. What do? They have to sell the only things they have of value, which is gold and silver. So they have to cover their margins, cover their losses. They dump metal, causes metal prices to dump along with markets. And then, of course, someone's on the other end of that trade. Someone buys it. And then later on, people swoop in and the price recovers fairly quickly. That's why I never get scared when the markets bleed red. and you see the price of gold go with it. It's just a discount period. It's on sale at that time. So central banks became net sellers of gold in August for the first time in a year and a half, and the latest indication that demand for the metal is slowing following a record-setting rally. Global central banks sold a net 12.3 tons of gold over the month, according to estimates published on Wednesday by the World Gold Council, an industry-backed body. The shift came just as the precious metal reached a record high, above 2,070 an ounce, in early August. It has since fallen more than 8% to 1,890, and as you know, we're above that now. The latest data reflect the pullback of some major buyers as countries free up resources to deal with the coronavirus. All central banks around the world are facing a lot of pressure for liquidity, said Bernard Dada, an analyst at Natixis in Paris. Now is not the time to hoard gold. The hospitals need the money, he said. So they're dumping their gold so they can fund this this situation. I think they're going to regret it. Uzbekistan led the sales, exporting $5.8 billion worth of gold in the first 8 months of the year, according to government statistics. So you wonder who bought Uzbekistan's gold. I'm curious. Who's on the other side of these trades? I don't think we'll ever really know all the time. And sometimes you can get it, Freedom of Information Act, sometimes it's out there in certain papers, but I don't know how you'd find out who it was that, and I'm sure it might have been multiple parties, other nations, but somebody was on the other side of that trade and bought $5.8 billion worth of gold from Uzbekistan. Central bank purchases have been a lesser factor in this year's surge in gold, which has been dominated by record demand for gold-backed exchange-traded funds, garbage. Global investors have poured more than $60 billion into such ETFs so far in 2020. But central banks have still bought between 200 and 300 tons, according to the World Gold Council. So even if they're selling a little bit here and there, and certain hard-hit nations are being forced to sell some gold, they're still buying 200 and 300 tons of it. So that's worth about $13 billion at the lower end on current prices. The sales follow a couple of banner years for purchases, including a record in 2018 when central banks bought 651 tons of gold, the most since 1971. So you wonder if they kind of knew something in 2018 when central banks locked in at 651.5 tons of gold. Countries included Russia, Turkey, Kazakhstan, attempting to move their reserves away from the dollar because they know what's going on. Last year, global central banks bought another 650 tons. So 2 years in a row, we're looking at 1,300 tons of gold consumed by central banks. Russia's central bank said in March it would stop buying gold starting in April, following some $40 billion of purchases over the last 5 years. China's central bank, the People's Bank of China, has also not yet reported any sales in 2020, and I wouldn't trust anything really China says as far as if they're buying or selling gold or how much they even have. I don't know if it would be very accurate. Turkey, however, has added to its holdings, becoming the largest buyer with 194 tons of purchases so far this year, worth about $12.9 billion at current price. Gold now makes up 49% of its total net reserves, the World Gold Council estimated. Higher prices hit demand for physical bars this year, with sales falling in the traditional gold-buying countries of India and China. In recent weeks, investment outflows and a stronger dollar makes gold more expensive in other currencies have pulled the market down from its peak. Gives you a little bit of idea what's going on at the central banks there. Now, scroll up. Okay, first time in 18 months, another article talking about central banks selling gold. It's basically a mirror of the last article. Just want to show you that it is getting out there, the information. And all of it really is focused on just a few small sales. Even though they're buying 200 or 300 tons here and there, there's only really a few small countries that are hurting financially that are offloading gold. And really they're just naming Uzbekistan and small banks like that. Most in possession of gold, the U.S., Germany, We've got the IMF, Italy, France, and Russia has all their tonnage right here. And of course, you still see that same consistent number of the U.S. owning 8,133.5 tons of gold, which we mentioned in an article that Rolf Steiner put together for us, his writings the other day. We shared that on the channel, his theories surrounding the U.S. possession of gold. Again, gold is seeing still, I would say, extreme demand, and I'm not going to even for a moment hesitate at still looking at and calling $4,000 gold just because a few central banks are hurting and selling it. Because I know they're going to step in, they're going to buy it again. And of course, they control, they manipulate this entire system. So, and I don't think Uzbekistan has any influence, but if anything, they're just a small broke nation that's being held hostage by the global elites. And who knows, they might have been mugged. They might have been forced to sell their gold to those who wanted it. So, there you go. I think central banks are playing a game with us. It's a psychological game. They're going to try to drop the price, and they're going to step in and buy it back. This article here, central banks will likely increase gold purchases in 2021, suggest researchers, which I share that sentiment entirely. Just because a few are selling this year, 2021, completely different. Things are going to change. All that free fiat floating around out there is going to find its way into their pockets, and they're just going to use it to buy more gold. Now, this came to us from the Wall Street Journal. I couldn't get the article up, I told you in the beginning. And the Fiscal Federal Reserve, Powell signs up to monetize trillions of dollars in more spending. So what does that tell you? Trillions of dollars in more spending. I mean, you have to be a rocket surgeon to know what that's going to do to the price of precious metals. When we talk about trillions more finding its way into the system, the velocity of money, the increase in the money supply, the devaluation of the US dollar as a result. You know what that's going to do for gold. Hopefully. If you've been on this channel for any length of time, I think you do. And again, this is the Fiscal Federal Reserve. Powell signs up to monetize trillions of dollars, Wall Street Journal. The Federal Reserve officials understandably and righteously invoked their need for independence last year when President Trump berated them on Twitter to keep interest rates low. But what if the Fed itself decides to compromise its independence by snatching an ever greater role in fiscal policy that is usually reserved for elected officials? And there's an opinion piece on that opinion piece, and it's from Bloomberg. So we'll take a look at their writings on it because I didn't pull up again the Wall Street piece. And here it is. I've got to scroll up. There's our friend Powell. And Mnuchin. You can see Mnuchin's kind of blurry there. Mnuchin, the urchin. The Fed still has a powder keg at its disposal. So far, central bankers have simply exhorted Congress to provide more COVID-19 aid. They could be much more forceful if they wanted. Now, a lot of this is talking about that modern monetary theory, and I want to get down to that. Talks a lot about the $80 billion in U.S. Treasuries each month that the Fed has been buying. Again, $80 billion a month, it's unbelievable, the numbers. Now, we go down here, because we've talked about modern monetary theory before. Here we go. Ray Dalio, founder of Bridgewater Associates, saw a move towards modern monetary theory as inevitable. In May of 2019, this passage perfectly encapsulates the Fed's current struggle. I'm going to read it. The most important engineering puzzle policymakers around the world have to solve for the years ahead is how to get the economic machine to produce economic well-being for most people when monetary policy does not work. I don't mean that monetary policy won't work at all. I mean that it won't work hardly at all in stimulating economic prosperity in the ways that we are used to having it stimulate economic activity, which are through interest rate cuts, what I call monetary policy 1, and through quantitative easing, what I call monetary policy 2. It's really the two tools that they use. That is because it won't be effective in producing money and credit growth, i.e. spending power, and it won't be effective in getting it in the hands of most people to increase their productivity, and prosperity. I don't know how giving money, free money to people, increases their productivity, because if you're giving money to people, they're not going to be productive because they don't have to be, because you're giving them money for free. That's just my theory anyways. Hence, I believe we will have to go to Monetary Policy 3, which is fiscal and monetary policy coordination that is of a form that we haven't seen before in our lifetimes, but has existed in various forms in others' lifetimes or faraway places. Mostly places where the currency went extinct because of it. I think you left that part out. It is inevitable that this shift will happen, because it is inevitable that central bankers will want to ease when interest rates are pinned at 0%, and when quantitative easing will be ineffective in achieving the goal. Now compare that with what Rosengren told Bloomberg News about the limits of buying more treasuries to boost the economy. Quote, "That's not to say that directionally it doesn't help. It just says the magnitude of the impact when rates are already so low is probably much less than what we want, which is why I think you're hearing Federal Reserve speakers call out for more fiscal policy," he said. The sentiment is virtually identical. Let's go to this part again about MMT. But here's the part that Dalio makes explicit, yet Fed officials don't dare go. MMT, modern monetary theory's most important configuration, is the fixing of interest rates at 0%. And there is the strict controlling of inflation via the changing of fiscal policy surpluses and deficits, which will produce debt that central banks will monetize. An added benefit of this approach is that the money and credit created can be better targeted to fund the desired uses than the process of having the central bank buy financial assets from those who have financial assets and use the money they get from the central bank to buy the financial assets they want to buy. Very interesting, my friends. If you notice, we've seen the discussions about modern monetary theory, and we know that many in Washington are proponents of this. They're discussing it. Bernie, I see the comments just now. Mr. Olfang says AOC. It's out there. This is being preached. And I can tell you that if certain parties are elected into power, it's going to be a reality. And all it will do is accelerate the destruction of the economy, the labor force, industry, and the currency. And it will, in fact, drive the price of gold up. The only options they're going to have is they're going to have to pass measures, laws, and be extremely hostile towards precious metals and those who hold them. There will come a point in this modern monetary theory economy where you and I will be declared essentially enemies of the state, economic terrorists, economic enemies. And they will do whatever they can in their power to assault us. They'll pass measures and laws stricter than that are already on the books to attempt to curb our ability to transact with metals, to buy and sell metals, and you can bet your bottom dollar or rupee or ruble that they will do whatever they can to tax any profits that you ever see on the sale of precious metals. That is for certain. It will be dangerous and difficult and dark, murky waters that we will have to navigate in hiding our wealth from the grubby hands of the Gibbs. The Gibbs me dat. Because the government's the same way. They want you to give them that, just like many of the people want the government to give to them. G-I-B-S, Gibbs. That's what it's all about. It's all about the Gibbs. Proponents of MMT, for their part, are up front about inflation. This is important because they're upfront about it, as the chief binding constraint on government spending. Meanwhile, but they say it's good, and oftentimes they preach that inflation, yes, it will happen, but it's not a bad thing. Meanwhile, given the Fed adjusted its entire monetary policy framework to encourage price growth in excess of its 2% target to make up for years of falling short, it stands to reason that the central bank wouldn't mind a jolt to inflation expectations. It's not clear what it would take for Fed officials to publicly pledge to keep interest rates low. Well, we've seen it recently, actually. They've pledged that they're not going anywhere and they will be zero for years to come, in excess of 2 years. And I think they'll continue to revise that and kick that cat down the road. Kick that can down the road. I saw someone write and cat. They're going to kick that can down the road.
Oh, I'm sorry. Did you say kick and cat down the road?
Kick that cat down the road is what I said. But they'll kick that can down the road, and they will maintain zero interest rates for a very, very long time. And again, we have to assume they may even entertain negative interest rates. But it's going to happen. They seem content to cheerlead for a compromise in Washington amid a frenzy of headlines from Pelosi, Senate Majority Leader Mitch McConnell, Treasury Secretary Steve Mnuchin, and others. For that reason, calling it the Fiscal Fed feels like hyperbole, at least for now. It's quite possible we haven't seen anything yet. And I don't think we have. I honestly believe we have not seen anything yet when it comes to the Fed, interest rates, and the price of gold. I think 4,000 is going to be a starting point. I think it's going to blow our minds where gold actually ends up at the tail end of this, which is, again, years from now. This is not near term. This isn't, 2 weeks out. We're talking about dynastic wealth preservation taking place during a major paradigm shift, a reset. We're on the verge, again, of a global economic reset. That's what this is. And we haven't even touched on tonight the other facets and angles that exist currently. I mean, the blockchain community, the cryptocurrency world, and how that's going to play its role here in people either hiding wealth, diverting wealth, or competing with the Fed. And then you've got central banks trying to hijack that and inject themselves and co-opt that technology and try to use it to their own means as well. So again, there's a lot of different variables here that are going to have to play out, and there's a lot of conspiracy. It is. There's groups and there's two people right here you see on the screen. They are conspiring to do something, to execute and employ certain policies. So to say these are conspiracy theories is ridiculous. There are indeed individuals in the highest levels of power, the highest levels of finance and government, that are having meetings and conspiring to do certain things. So yes, it's a conspiracy. There is a conspiracy at hand. Nothing we can do about it. That's that. We've talked about the gold price. We've talked about central banks buying and selling it, the Fed. Those were the three big ticket items tonight. The dessert, if you want to call it that, the little truffle or treat, the cherry on top. One little article pulled up. Thought it was a joke. I never really looked into it because I never cared. I don't have an IRA. I don't know how many of you have IRAs. This article was essentially just telling you what coins, what bullion is eligible for IRAs. I don't know why people put metals in IRAs. I just don't get it. It really does confuse me. Just buy them yourself. Hold them yourself. I'll show you why. But this article is about that. About the part that... Let's just read the beginning. Here you go. Many people know IRA investing is a wise way to plan and save for the future. It's a tax shelter thing. For those of you that live in other countries, in the U.S. here, there's this things called IRAs. But what you may not know is that you're able to use certain bullion coins as part of your individual retirement account portfolio. I think many of you have seen the advertisements about gold and silver and putting it in your IRA, or if you've been on any of the coin sites, bullion sites, you'll see certain products labeled as IRA eligible. Again, not into it. IRA investing is a complex matter. This is the best part. It's a complex matter. You're too dumb, is what they're saying. You're too stupid to figure this out. Something best handled by a skilled financial advisor. So I'd stop them right there at that period and say, well, what do you mean? Am I too dumb to buy precious metals and hold them and store them on my own? If bullion is something that can be in an IRA, I don't see why I need to have a skilled financial advisor. First, I'm going to break that down for you. I've never encountered, met, or discussed with a skilled financial advisor. They've never met that description. Skilled. What does that even mean? Skilled in what? Do they know how to use a ball-peen hammer? Do they forge copper? I mean, what kind of skills do they have? The ones I've talked to usually failed at every other job they ever had, or they fell into it. They used to be a used car salesman, and now, no offense to them, those are good, valuable people that actually have probably certain skill sets. They just couldn't do anything else, so now they just peddle stupid mutual funds, dumb bonds, and garbage that really no one else wants. Large caps and mid cap funds that it's, where people send their money to die, and they try to talk you into it. When you work for some place, they try to get you in a 401 or a 457 deferred compensation plan. They try to get you in your IRA. They handle those as well. They don't know anything about monetary policy, economic history, the strength of currencies, how the economy works, devaluation, gold. Most of them will actually make an effort to steer you away from precious metals. Many of these, quote, skilled financial advisors that I've ever met, and I've met more than a handful, are somewhat hostile towards precious metals. So again, a lot of them are ignorant to certain things that we know to be true here, certain knowledge that we hold, you guys in the audience and here on the channel. So I wouldn't call them skilled, and I don't know why he's complimenting them to be the ones that should be able to handle you purchasing bullion coins when you can in fact go to various sites like APMEX, JM Bullion, SD Bullion, and buy the metals yourself, store them yourself. And there you go. You hold it, you control it. You don't ever have to call them up and say, hey, I'd like my metal. The economy's going to heck, and things are looking really bad. I would like my IRA metal physically delivered. Because I can tell you that's going to be a really long phone call. You're going to have to listen to hold music, and you're probably going to go crazy listening to the hold music as they patch you through to person after person after person, and then you're going to have to fill out a lot of paperwork. And then you're going to have to pay probably a certain amount of taxes or fees on the gains that you held for it. It's going to get reported. Someone's going to know you hold it or own it. And then it's going to maybe after a long time, possibly get delivered. And you're not going to really have control over what coins that I'm sure they deliver you, what condition they're in. To me, it's a significant disconnect from you, the buyer, the holder, the investor, the owner of the metals, and the metals themselves. To me, they're an unnecessary middleman. They're a solution to a problem that doesn't exist. Therefore, they do not need to exist. You don't need a financial advisor, and you don't need an IRA to own precious metals. And I would steer clear from them. I've preached that since the beginning of time on this channel. But that wasn't the point of the article. The point of the article is what coins can you use in your IRA, if that's actually a question any of you had. According to this, the rundown of the IRS minimum fineness guidelines is gold coins have to be 995, silver coins 999, platinum coins 995, palladium coins 9995. So 395 for those, gold coins 995. Which I don't understand because I don't believe American Gold Eagles reach that fineness, but they are eligible. Now that means that 90% gold, silver coins, they're not eligible. Let's go down here. It talks about them. Here's the ones. Let's go. Okay. See, this thing, because American Gold Eagles are not 995. They do hold. I know they hold a full ounce of gold, but they're diluted for strength and hardness, so they don't wear out. But they're not 99. Well, I guess they're 99. Yeah, they hold a full ounce of gold. You know what I'm saying? We've talked about that on this channel before. The actual fineness of an American Gold Eagle. And that's why they are an excess weight. They weigh more than an actual troy ounce because they hold a full troy ounce, and then other metals are added for hardness and durability. Now, American Silver Eagles, those are pure silver. Those are eligible. Buffaloes are eligible. Platinum Eagles are eligible. And these are the foreign bullion coins that are usually accepted in an IRA. Canadian, all the Canadian stuff, and then Mexican Libertads. I know there's a lot of fans of the Libertads on this channel. Beautiful coin. I have yet to own one, however. I've had them in the past. I don't have any currently. They are a beautiful, indeed, probably one of the most beautiful silver coins ever minted, ever struck, is the Libertad. And there's different iterations of it. I like them all. But again, that's it. Those are the coins that are eligible. The only reason I brought this article up to close with was because I wanted to do, I haven't done it in a while, a really good IRA slam. And I hope I pulled it off. I hope I was able to really just insult the IRA community. I hope that I really hurt the feelings of the, quote, skilled financial advisors out there that think they know a thing or two. Most of them don't. I tend to not listen to them because, honestly, if they don't know basic economic history, economic theories, monetary policy, and the history of all of it, just the U.S., if they can't even tell you the U.S. economy and the history of from the Coinage Act till now, if they can't talk about Bretton Woods and the gold window with Nixon, if they can't talk about those certain key dates, the Fed and all of that, you know what? I really don't care to hear their advice because the foundation that they're building their financial advice on, to me, is inherently flawed. So that's my piece on that. And that's it for tonight. I mean, that's all we got. That's all she wrote. That is tonight's installment of the Junius Maltby channel. So I guess we could go to questions if we wanted to. Mrs. Maltby's distracted behind me. I think she's in the chat with you guys.
No, I'm dealing with other things.
All right, she's dealing with other things, whatever that means. All right. I'll go to the comments on my own, by myself, and let's see who's talking. Because, again, you guys know I can't read the comments when I'm doing the articles and the broadcast. It's impossible. I can't multitask. I don't have that many eyes. So now that we're freed up, the content is done, why don't you guys go ahead and hit me with some comments, questions, or discussions, something that's clean, something that's relevant, something that's pertinent, something that works. Let's see, I'll start with Entity of Me. I'll take Christopher Vos says, I'll be 64 in 28 years. Plan accordingly, my friend. And you know what, that's the other thing, the date when IRAs are eligible. I don't like that because, look, I don't know if I'm going to live that long and I might want the wealth now. I don't like how it's locked up for a certain period of time. Okay. I need organic food. Christopher Vos says, I need organic food from Mrs. Maltby. She's actually doing some pretty good stuff here. I'm gonna probably become healthier. Junius might actually make it to 64. I might live a little bit longer because Mrs. Maltby's on this. She's been healthy always, but she's on even a newer health kick. She started...
I don't really want to make these changes. I'm just listening to the surgeon.
It's good. It's
good.
good.
I like sugar.
Yes, her surgeon's...
It's bad for you.
The anti-inflammatory stuff that you're doing is going to help me out because I probably have all kinds of problems.
I'm just saying, I'm really crabby because I want my...
Yeah, we're cutting out some of the... I already cut out sugar.
Yeah.
If anything, you got me to drink... I never drank soda pop. I'm going to tell the audience right now. I never drank soda pop. You know, your Coke or your Sprite type stuff until I met Mrs. Maltby. But you know what? You got to live a little. So sometimes you have some Mexican food. You got to have a good sugar.
I'm sorry,
Mexican
but
Coke.
I'd rather drink a nice Coca-Cola before I get hit by a random bus. I mean, how many people live and just they don't eat things that are good or like they miss out on a birthday cake or whatever and then they die anyway?
Exactly.
I mean,
I read about a triathlete that drowned.
All in moderation.
Yeah.
It's just moderation.
Yeah, nothing in excess, everything in moderation, like the Greeks would say. Yes.
We did
Rolf
build
asks,
a garden this
Rolf,
summer.
yes, we did. Mrs. Maltby really kicked it out. We did a good little garden this year. We grew some tomatoes. We had fresh chives every morning with eggs. We grew some chives. We grew cilantro, which we put on a lot of our food. Some good tomatoes. Cherry tomatoes. One of my favorite things to do is I have a little basil plant and then a cherry tomato plant. And when the cherry tomatoes are ripe, they kind of time it just right with the basil. I'll go outside and I'll pick a big fat basil leaf.
I hate basil.
And I'll wrap it around a nice plump, juicy, sweet cherry tomato.
I want you to tell people about this thing.
And I'll pop the two in my mouth. What's that?
This thing is incredible.
Mrs. Maltby's really proud of this.
It's called the Comfy.
It's called the Comfy. Apparently it was featured on Shark Tank. She's very, very happy. She told me today it's the best invention in the world. We're not endorsing it. We're not advertisers. We're not even influencers or anything like that. But she's very proud of this.
Don't I look fabulous?
I'm trying to describe it. You got to give me a minute here. I don't know what fashion category this thing falls into. It's kind of like a thick insulated parachute. And she looks somewhat frumpy in it. It's she's a beautiful, slender lady, but she puts on essentially a big comforter with sleeves and a hole where your head pops through, and then a hood, and it drapes down past your knees somewhat, and it's got an insulated layer, and the kitty likes it. The kitty's sleeping on it. It's apparently very comfortable and very warm, and being that Mrs. Maltby tends to be cold no matter what the temperature is, she's wearing it now, so she's very happy with it. She found it today at Costco, of all places. Yes, a Costco here in the United States. And I was, walking through the Costco, speaking of Costco, and they didn't have gold bars or anything like that because we're in the United States. I know that some of you live in places now where there are Costcos that hold gold. I don't happen to be in that place. But that's it. What else we got? No, D-Dub, she's cutting out the chocolate, so I can't give her some chocolate.
Oh, it is like a moo-moo. But, not really.
A moo-moo, a Snuggie.
It's like a potato sack.
Carlos Danger is saying it's like a Snuggie. I don't even know what that was. Snuggie.
Yeah.
I don't know what any of these things are.
It's atrocious. I don't think I'd even wear this to get the mail. But...
Yeah, maybe if you went to Walmart.
It's a Walmart outfit.
You'd blend in. The one good thing about that is you could carry a pistol grip pump shotgun.
I could carry an entire Arkansas kangaroo in this, and nobody would know.
You could have an Arkansas kangaroo underneath that, and no one would know.
And an entire ammo can.
Mm-hmm. Yeah. There's a lot of things you could carry underneath.
With ANCAT in the pocket.
Yes.
I kicked someone from the channel today.
Oh, really? Really?
Yeah.
Were they saying rude things?
They were speaking poorly about you.
Oh, really? All right. Well, good riddance to them. Hopefully they can go fall down some stairs. They should go practice doing that if they're still listening.
You guys should look up this video online right now that's going around with the mountain lion stalking this guy.
Oh, yeah. Interesting film. A little piece.
I wish there was a way to kind of walk politicians down that trail.
Well, if I ever seized power and had my own... being a Roman, if I had my own Colosseums for the entertainment of the masses, I would entertain live animals in a Colosseum where we could let the politicians run around and meet firsthand very hungry predators. I think that'd be a very entertaining thing and a way to really usher in the new Rome.
So there's a few questions here. One, do you think there'll be a food shortage this winter?
Oh, I don't know. There's always possibilities. Depends, it depends on the supply routes, shipping, food supplies, all that stuff. If it did occur, it would be, in my opinion, it would be a manufactured crisis.
Carlos Danger has a good question. I just want to throw in before you read it. If Kamala is president, I will lose my mind. Only because I cannot tolerate her.
I'll read his question. What do you think happens if there's election, no clear winner, and we have a President Pelosi or Perez, Kamala Harris? What do the markets think, in your opinion? Oh, I think if there's any chaos with that, the markets will be extremely volatile, and they'll likely retreat significantly. We'll see all kinds of problems. That'll be the least of your concerns. I can really care less what the Dow's doing. If Kamala Harris is in any form of power with Crazy Nancy, I don't think the markets they're not gonna matter. You'll be dealing with other things at that point in time. All right. Yes, I agree with Jeremy. All of this is manufactured. Absolutely. All of this is. That's it. I'm the candle's burning low, and I'm gonna shut it down. We're good. We're good for the night. We covered a lot of good material. You guys were present. I appreciate it. Quite the full house. We're 94 viewers most of the time, so that's good. There's a lot of you in there, a lot of you talking. Hope you enjoyed the content.
Hey, your thumbs down guy showed up. It must be
Oh,
the
of
one
course.
I booted.
Yeah, thumbs down guy's always around. That's all right. He's welcome. Thanks for tuning in, all of you. I appreciate it. Big shout out from the Junius Maltby channel. Thanks for everyone who was here participating. Thanks for each and every one of you. Remember, always fight communism and keep on stacking. Thanks for tuning in. Have a good night.